Hey guys, welcome back to the channel. So in this video, I'll be sharing with you my market analysis and update for the week of 26th to the 30th of June. So we'll begin by taking a look at the main indexes. Right, so if you take a look at the three main indexes, the S&P 500, the Dow Jones and the Nasdaq, all three main indexes faced a pullback last week, right? So if you watch my previous video, so I did a market analysis and update video 2 weeks ago or the previous week. Right, so in that video, I mentioned that because the indexes are a bit overextended from their key moving averages, I said that we could possibly experience a pullback for last week, which we did, right? So the reason that I said that we could face a possible pullback, and just to give you a recap in the previous video, so the reason why a pullback was likely, or there was a high probability that there was a pullback in last week, was because that most of the indexes were a bit overextended from their key moving averages. So if we take a look at the S&P 500 for this day over here, this was Friday 2 weeks ago, right? So you can see that from here, the S&P 500 were a bit overextended from their key moving averages. So this is the 10-day moving average, this is the 21-day exponential moving average, and this is the 50-day moving average, right? So you can see that over here, last Friday, it was, at least in the short term, it was a bit overextended. So we could face a pullback. So on Tuesday, so last week we had a shorter trading week. So the markets only started opening on Tuesday. So if you take a look at Tuesday, we actually experienced a gap down on the S&P 500. But so far, the price action isn't that worrying just yet, right? So the reason I say so, because right now you can see that the S&P 500 is actually finding support at the 10-day moving average. So on Friday, it closed below the 10-day moving average, but usually we will face shakeouts like this and in the indexes and in stocks, right? So, but so far, generally, the S&P 500 is facing or is finding support at the 10-day moving average. But based on the past price action, especially the recent price action, I would say that the 21-day exponential moving average serves as a key or a more key support area for the S&P 500. So if you take a look over here, like the past few times, the S&P 500 actually declined to the 21-day exponential moving average, the green line over here, and it bounced, right? So over here, you can see that it doesn't bounce or it doesn't find support directly at the 21-day exponential moving average, but it generally finds supports there, right? So over here, it finds support, it finds support, it finds support over here and over here. So moving forward, if prices actually decline, let's say for the S&P 500, if prices continue to decline in the coming week, I would say that the key support level that I'll be taking a look at is this green line over here, or the 21-day exponential moving average. So this means that there's a possible downside of a further 1 to 2%, right? So it doesn't necessarily have to find support at the 21-day exponential moving average. It can decline a bit below that moving average and move up from there, right? So it just serves as a general support for the S&P 500 if the S&P 500 do decline in the coming week, right? So that will still be normal price action, right? So as we all know, in an uptrend, prices do not rise up in a straight line, right? So prices tend to follow a wave-like motion, right? So a wave-like motion is whenever prices rise, it will experience a slight decline. Then it rise, it faces a slight decline over here, rise, decline, then rise, decline, rise, decline, rise, then we had a decline over here. So so far the price action for the S&P 500 and the other indexes is still a positive one, and the uptrend is still intact, right? So that's for the S&P 500. If we take a look at the Dow Jones is also finding support at this key area over here, right? So I've highlighted this zone in green, right? And then over here we have the red line, which is the 50-day moving average. So moving forward in the coming week, I expect if prices are to be positive, they will continue to find support at this area over here. And the next one is for the Nasdaq, right? So the Nasdaq, similarly, it experienced a huge run up over here. Then it faced a temporary decline in the last week, right? So moving forward, you can see that so far the Nasdaq has been finding support at the 10-day moving average, or this orange line, quite often in the past. So you can see it finds support over here, finds support over here, and find support over here, right? So moving forward, we can expect the Nasdaq to also continue to find support at this area. But if the Nasdaq do decline and break below this 10-day moving average, the next area of support that I'll be taking a look at is this area of around $356, right? So this will correspond to the 21-day exponential moving average and also this key support zone over here, right? So that's for the Nasdaq. Now let's take a look at the IWM and IWC, right? So the IWM is the Russell 2000. So you can see that for the mid to micro cap stocks last week, they experienced a slightly bigger decline compared to the other indexes, right? So you can see over here for the IWM, it actually fall below and close below its 21-day moving average on the Friday's trading session, right? So this is for the IWM. So it's a mixture of micro to mid cap stocks. Then if you take a look at the IWC, this is only for the micro cap stocks, right? It also fall and close below the 21-day moving average. But perhaps what is more worrying for the IWC is that it actually fell below the 200-day moving average. So this is the black line and close below the 200-day moving average. So in the long term, like if you want to take a look at a trend in the longer term, we want to see prices trading above the 200-day moving average. So anything below the 200-day moving average is bad news for a stock if you are longing the stock, right? So the IWC actually put in quite a negative price action on Friday's trading session. It gapped down and closed below the 200-day moving average. So if your stock strategy includes buying microcap stocks, you might want to pay attention or scale back your trading in the coming week, right? So that's for the major indexes. Now let's take a look at the market breadth. So market breadth for last week, you can see across all these charts over here, market breadth actually decreased or decreased in the past week, right? So 2 weeks ago, we actually positive action in the breadth across the NYSE and the Nasdaq, right? So actually it was trending quite nicely, but in recent weeks, it broke that trend. So you can see that it actually declined. So the percentage of stocks above their 50-day moving average declined. The percentage of stocks above their 200-day moving average also declined. And then the new high, new lows also declined from here. So that's for the NYSE. For the Nasdaq, you also see that across the board, it also was deproving breadth, right? So the breadth wasn't that good in the previous week. So we had the Nasdaq declining over here. So this is the number of stocks above their 50-day moving average for the Nasdaq. So it decreased here. This also decreased, and then new high, new lows also decreased to negative territory. So the breadth for the overall indexes in the previous week wasn't that good. Now that we take a look at the indexes, let's take a look at which are the sectors that outperformed last week, right? So if we take a look at the sectors first, we go from indexes to sectors, then to the individual groups and industries, right? So you can see for the main sectors last week, all of the sectors record negative gains last week, right? So we have the SLP, so we have XLP, XLV, XLU, all of them over on this list over here, they had negative weeks, right? So so it's safe to say that last week was a negative week for most of the different sectors and also for the indexes as a whole, right? So if you're trading, then you might want to pay attention to the developments happening in the indexes and the sectors also. All right, so that is for the sectors. As for the industries, last week we had a couple of industries that stood out, right? So the two main industries that stood out was the crypto industry and the home building industry. So let's take a look at this one. So this is the WGMI. So this is the Bitcoin miners ETF. So you can see that we had news the previous week that BlackRock, one of the largest fund managers in the world, actually fought for a spot Bitcoin ETF with the SEC last week, right? So upon that news, Bitcoin and also this ETF all rose on that news, right? So for this WGMI ETF, it outperformed the overall market last week, right? So it recorded a gain of 3.67% on Friday. Let's take a look at the weekly gain, right? So on the weekly, it managed to clock in a positive gain of 18.21%. So the Bitcoin miners ETF did pretty well last week. Let's take a look at the next one. So this is the BLOK. So this is in general for the blockchain industry. So you can take a look at for this ETF. For last week, it put up a gain of 5.63%. And if we take a look on the daily chart, right, so you can see that it also, this ETF, the BLOK, also move up on those news, right? So that's the first industry that performed relatively better against the overall market. So it was the crypto industry. Then the next one is the home building or home construction ETF, right? So you can see that for the home construction one, if we take a look at the weekly time frame, the home construction ETF actually recorded a positive gain of 1.86% for last week, even as the overall market indexes recorded a negative gain, right? So over here, home construction ETF continues to remain strong for this year, right? So actually for this year is up by close to almost 20 to 30% for this year, right? So the home construction ETF continue to remain strong despite the macro conditions, right? So like rising interest rates and everything. But at the end of the day, the price action is the one that guides your decision, right? So, and the home construction ETF has been performing very well against the other sectors and industries. If you want to remain updated for these new videos, make sure you subscribe to my channel, because each week I'll release one new video about the market update and my analysis of the markets, right? So I'll see you in those other videos to your financial success.